Well, the Fed came out with their press conference, answered some questions, and it basically ended up being a non-event. Early in the morning, we had a lot of shakeouts and big names, and then they rallied right back to really just finish the day flat. If you're new here, welcome to the channel. My name is Michael Silva. This is the Stock Market Brief Show. Today's date is July 28th. In today's video, I have some interesting things that I've been noticing happening with volatility, so I want to bring that up in today's discussion, as well as go over the 11 sectors in the S&P 500. So I have the daily charts there where we're going to map out some key levels and kind of what I see going on in the market. Let's get into today's show. All right, everybody, welcome back to my computer. So you can see here the market dashboard. Dow, S&P, NASDAQ, relatively flat overall. Small caps had the best day, I guess you can call it, up almost a percentage point. So really during this event, yeah, we saw some big swings, but it really overall, nothing took place. This was a tweet from Mohammed El Arian. I suspect that many may agree that this was one of the most confusing Fed press conferences. It's funny because I'm glad that he wrote this, because while I was listening to him answer questions, it was like dancing around certain questions. It was weird. It was bizarre. And I'm sure you probably think the same thing if you were watching it. But he said, where there may be disagreement is why, particularly the balance between genuine economic uncertainties and what behavioral scientists call active inertia / too deeply wired convictions. So although it was interesting watching the press conference, really not too much came from it at all. Let's look at the S&P 500. You look at this candle right here that formed for the daily time frame. That right there is a doji candle. It represents indecision. It's also an inside trading candle. So we really didn't move anywhere. We stayed within the range of yesterday's trading day. Now it's in bullish context, so typically you get resolves to the upside. But we're going to talk about volatility here soon, and it does seem like we're going to have volatility potentially increase. Now I don't know if that's going to be necessarily a positive thing if you're long or a negative thing, but it does kind of suggest that we might see some bigger swings, bigger moves here in the very near future. If you look at the VIX on the 30-minute time frame, we got pretty overextended on the lower Bollinger Band, and we started to bounce back here towards the end of the day. We did fill one of the gaps. We still have two beneath us and one right here above us to keep an eye out for. If you look at the NDX, NASDAQ 100, we cracked through this trend line and we started moving higher. We found a little bit of weakness, and now we're back over here. This move right here, I mean, when you really think about it, it's from mid-May to just mid-July-ish, not even mid-July, early July. That right there is not really price discovery. This is just going straight up without any hesitation. Then when we crack down through this trend line, bam, right up to the upside again to create another all-time high and a higher low. Okay, today's price action, inside trading day as well. A lot of indecision, a lot of earnings going on this week. So perhaps this was the market really pricing in earnings because they're great, right? Earnings are great. Everything's going up. Maybe this is the market pricing it in. Like I said, I can't tell you which direction the market's going to go. We can prepare for either ways. An indecision type candle like this, we got to look for either confirmation of a breakout of the previous trading day and then it go to all-time highs, or if we start breaking down. Now, where's support and where's the context of this chart? It's in bullish context. We're above the 20-day, above the 50, above the 100, above the 200. So everything from a technical perspective, zooming out here, it looks pretty darn bullish. Now, what's crazy is I had to go look at Facebook because they just reported earnings, and just look at this drop going into after hours. So it's down, I mean, as of me recording this, it was like 3.4%. And they reported earnings right after the market closed, and bam, right to the downside. However, what's pretty cool, one thing that you can do is you can go to, you can use Thinkorswim or whatever platform you want to use, and you can look at the implied volatility. If you just look at the last two trading days, these are options chain. If you look at July 30th, 2021, and I'm looking at the 2-day options, they're pricing in, 71.63% implied vol. But then if you look right here to the right side, you have a potential move of $18. And what I found interesting was the option markets priced this in. It didn't price it into the downside. It's just basically saying that, hey, it's very likely that we move $18 in the next 2 days, regardless of any way, right? So, well, what do you know? Earnings, we came right down here, just slightly below it. And this, to me, actually sets itself up and sets the stage for potentially a buy on dip because we still have a couple of days left here, okay, before and it's rare to see expected moves go beyond their expected move, right? So and I believe the percentage is like 68% of the time it stays within that range, that plus or minus 18. And if we're going to tag the lower range of it, that might act, like I said, as a potential opportunity to go long. Now, I don't know where it's going to be at open, but that does present somewhat of an opportunity. And you do have a gap down here at 352. So if we move past the expected move and we fill the gap at prior resistance, that to me sets itself up for a potential buy the dip opportunity if that's something that you're into. If we look at IWM up a 1.47% for the day. We're still below the major moving averages right here, the 5100, and I believe we're still below the 20 period as well. Yeah, the 20 is at 221.84, and we closed at 220.82. So we're just right below it. PMO is crossing over to bullish, so that looks pretty decent so far, but it still has a lot of work to do. Potentially, you can call this a flag. It's a little pull right here, and then we're flagging, consolidating sideways as we're holding above this 216 level. If you look on the 15-minute time frame, we had a gap, and then it just completely rolled itself over to fill the gap, and then it found a lot of support from there. And then I called out on Twitter, it looked like it was going to go attack this 222 when we're right around this range. We went and attacked that 222. We failed to get above it. I mean, that makes sense. It was an aggressive move to the upside into a previous area of resistance. This is not bad to see, but it would be nice to see it digest and move sideways and then potentially break out if you are long the small caps. If not, we're just going to continue to watch this trading range that it's in. And the trading range is really 216 to 222. And if it starts breaking out one of those areas, then I'd be a little bit more cautious if it breaks down, and I'd be a little bit more bullish if it starts breaking above 222 because it presents some good opportunities. All right, so let's talk about what I see here coming into the next months. I pulled up a seasonality chart. What does seasonality suggest? Well, we talked about this at the end of June. July, guess what? Typically you see big moves in July. What have we seen? We saw nothing but a ramp up here in July, right? If we're looking at the S&P 500, July right here, boom, we moved up. Well, we came back down, but we came right back up to all-time highs. So it's fitting the script so far. And it has been matching the script so far for the most part. Now, what's the next 2 months is pretty interesting. The next 2 months suggest downward movements, right? August is a week, like these next 2 months are based off of seasonality, usually weak, all right? So be aware that it could be a little bit more difficult heading into the next 2 months. I find this interesting. I looked at the VIX and I started looking at the Bollinger Bands, and then I brought up the Bollinger Band width, and you can see here that the Bollinger Bands are contracting, and this can present itself what's known as a Bollinger Band squeeze. Once again, it's undirectional bias, right? You can't say it's going to be breaking out. You can't see it's going to be breaking down necessarily, okay? But what I do find interesting is the last times that the width, the Bollinger Band width contracted this tightly. I mean, the last time, it just got down here. The last time it was here was September, actually more like late August coming into September of 2018. And if you remember then, we had that big vol spike. Okay, the time before that was right here in early 2017, and we had just a little bit of a spike in vol, nothing crazy. So be mindful that when the Bollinger Bands start contracting and getting tighter and tighter, it does suggest that we might see a stronger move in a specific direction. I can tell you which direction, just by just a technical pattern falling wedge, you can potentially break out to the upside. So that's one thing to watch, and this does match the seasonality script, right? So typically weak months, right? The last time we were here was in September, August 2018. We saw a vol spike. Technically, you can actually draw a little pattern right here too. It's another falling wedge. So that's always a possibility, something to keep you on your toes. The VXN, similar situation. Volatility is contracting here. The Bollinger Bands are getting tighter and tighter. And when they get tighter and tighter, you can expect to eventually see a little bit bigger moves, whether it's to the upside or the downside in the indices. The VXN would be the NASDAQ 100. And when you really look at the NASDAQ 100 and on its big tear, and then you're starting to see big moves like in earnings, it does suggest that we might be seeing some bigger moves in like the Qs and in the NASDAQ 100 too as well. And then the last one here is the RVX. Also, Bollinger Bands are contracting, you can see, since really from June. Yeah, March, April, May. Yeah, I would say July. July really was June or July. It doesn't really matter. The Bollinger Bands have been contracting for about a month, to say the least. Okay, and as long as we stay compacted here, they're going to continue to contract. And when they contract more and more, like I said, could be a potential Bollinger Band squeeze where we see a stronger move in either direction. If you look at this indicator, we're looking at the trend. This is something that I learned from Tim Ord. This is a really cool indicator. When we come down to this red line on the 10-period moving average on the 60-minute time frame, it typically gets bearish for a period of time. However, it's been the last 1, 2, 3, 4, 5 times it's happened. Sorry, out of the last 5 times it's happened, only 4 of the times went bearish. I mean, that's a pretty good percentage, right? So 4 out of 5 times this indicator was correct to say that we're going to head lower. However, what I do find interesting is the one time that it didn't get it right, it was coming from a very extended reading, a bullish reading, and then it retracted very quickly back down to the red line. Okay, that's exactly what's taking place right here. So, although the 4 out of 5 makes sense that it could potentially, we can see some weakness in the days ahead, that right there kind of, it just throws this indicator for a little bit of a curve. So you got to use a lot of different, just basically support, supply, demand levels going into this week, the remainder of this week, I should say, and the weeks to come, to really kind of determine, if we're going to be breaking any key levels. Let's hop into the sectors really quick. XLU, I think XLU is an opportunity to buy on dips. If I look at the relative strength, it's been slightly picking up here. The PPO, price percent oscillator, also building some momentum too as well. We have an inverse head and shoulders. We saw a strong candle the other day. Now we have an inside trading candle here. So if we start breaking above 67, that could be very good for utilities and individual utility stocks. Consumer staples got a little frothy, a little overextended, so we're seeing a pullback here. That to me makes sense. Where can we potentially go? I drew out this zone of support here, which is right around 70.50 and the 50-day moving average, 20-day moving average. So there's a lot of confluence of the support, so that could be a potential buy on dip there too. You can see here it's been slowly rising, but overall in a downtrend as far as relative strength goes. XLB looks pretty interesting to me as well. We still have a band of resistance just overhead that's in confluence with the 50-day and the Bollinger Band. Okay, so maybe if the Bollinger Band keeps tightening up, we might get a Bollinger Band squeeze, which, I mean, we see how tight they were right here, squeeze to the downside. Tight here, squeeze to the downside. Perhaps, if they get tight, we might be squeezing to the upside for once here. The price percent oscillator, it's been putting in a positive divergence here. The RSI has been putting in a positive divergence, suggesting, so you can see here a low and a lower low, a low and a higher low, right? So we have some strength coming in, some momentum coming in despite the price action here. And then we have a subtle move in the relative strength. So if we start breaking above these key levels, I don't think you want to miss out on materials, at least the sector or individual names that are in the materials sector, because that could present a very good opportunity. Let's look at financials really quick. Financials in this falling wedge. I'm not the biggest fan of financials here. However, there was strength today in them. We saw a pretty nice pop for the most part. And if we start breaking out that, to me, this looks like a little potential bull flag forming right under a key area of resistance. And that is never really too bearish. So if we start breaking out of this, I think we can go tag that upper Bollinger Band right around 37 to 37.30 before we see our next area of resistance. You can see relative strength not doing all too hot. But if you look at the RSI and you look at the price percent oscillator, also you're seeing a little bit of strength come in too as well. So there's a positive divergence there for financials. Technology, inside trading day, found support at the 20-period moving average. If you want to play this, if it starts heading lower, I would say the lower Bollinger Band to the 50-day moving average, this zone in here, would be an area to buy the dip. I'm bullish technology. Just know that it's been just completely straight up. And it's going to need to digest its gains, I would imagine, eventually. And a couple of things that have me a little bit on high alert is the negative divergence building in the RSI and also the price percent oscillator. Relative strength, it's strong, right? It's kind of rolling over right here a little bit, but overall it's pretty strong. Industrials, let's go through industrials really quick. Also, positive divergence. In the price percent oscillator and the RSI. Meanwhile, the relative strength is not looking too hot here. Okay, so that's something to keep in mind. I would say we need to start getting above this area of resistance, and then we could potentially lead into potentially a Bollinger Band squeeze, right? We have resistance, we have the upper Bollinger Band, and we're kind of holding right at that 50-day and the 20-day moving average. but it's relatively flat. It's not giving us a clear trend signal. But if you look at the 100 and the 200, it's clearly a nice separation between the two. They're going, from the bottom left to the top right of the screen. That to me is pretty bullish. So it's overall in bullish context, but you want to get some confirmation breaks above that to feel a little bit more confident in that trade. Then the last, actually no, I got a couple more, sorry, my bad. XLE, we have that island reversal type pattern. We're starting to see strength, bullish crossover potentially for the PPO, and then the relative strength starting to pick up here too. Now you could potentially see this as a bear flag, and that makes sense because we're below some key moving averages. However, this sets up for a good risk to reward trade if you like buying specific dips. Why? Well, I mean, you have a potential reversal type pattern here, and the price action's been holding so far. So you can potentially just enter in and have a stop either below this or below this cluster of candles right here too as well. Me personally, I like to give stuff room. So I would say, this was a low, this was a low, this was a low, this was a low. That's right at around 46.30. So I'd probably go one ATR or one average 2 range below that. And then I would play to see it potentially break out to the upside, and I'd get like a basis point in there, or sorry, up like 0.25% is one of my risk units. XLC communications, and by the way, I'm still working on the video to make how I do position sizing and kind of walking through that. Communications is getting a little frothy over here. Big spike in volume, that's interesting, and it's also kind of tagging the upper range of the Bollinger Band. To me, this kind of seems like it wants to come back down, maybe fill this gap right at around 81.80. That would make sense. 81.80 is where the 20-period moving average is, and also this prior resistance here too as well. So overall, very bullish context. You see it's just been kind of just chomping up higher and higher. Maybe this is right one of those areas where it wants to breathe a little bit and then continue its pathway. XLV. Healthcare has been really strong, but we are getting into that upper Bollinger Band, so just be mindful that it could be getting a little overextended. This, to me, this is awesome. This looks really strong. Why? Price percent oscillator, there's no divergence there. It's moving up. It's above 0. Relative strength, finding strength. RSI, 69.77. It's strong. The context of the chart is strong. So this to me is like, yeah, you can buy on dips here and you can feel pretty confident as long as you're managing your position size and your risk versus reward. Focus on risk first. XLY consumer discretionary. I'm looking for the lower range of the Bollinger Band in this supply zone for setups. What do we have today? Well, we had a confusion type day, inside trading day, and then also somewhat of an indecision type candle. Now, what is interesting is we do have a negative divergence here on the RSI and also the PPO. So we're starting to see in these like high flyers, the consumer discretionary, technology, we see these negative divergences, but yet we're starting to see strength in more defensive sectors. And then the last one is XLRE. Also looks pretty good overall. I will note that we have a negative divergence on the RSI, and the price percent is kind of slowing down, but its overall context here is quite bullish as we're holding the 20, 50, 100, and 200. Real estate, I'd like to see come down to the low range of the Bollinger Band, probably around 45, where there's prior price action right around here, and then we have confluence with the lower Bollinger Band in the 50-day for an area of support. All right, everybody, that's all I have for you on today's episode. I think I went a little bit longer than I wanted to do, but we went over the 11 sectors, and then just a couple things to keep in mind going into the next couple of months, which I'll get more into detail as time continues. And then we discussed also the volatility contracting as well. So it does suggest that we might be seeing some larger swings here in the days to come, or potentially a week or weeks to come. So be very mindful of that when especially it comes to positioning, sizing, and just managing risk overall. All right, everybody, have a wonderful night.